Well, good evening, everybody. Hey, it's Scott Henderson, shooter. Hey, welcome to the town hall meeting. We're going to cover some chart right into it. Now, of course, at the end of our presentation, please do review our disclosure. Let's start off with the S&P 500. Now, I've been drilling that, I find it a very challenging period of time because the way that rotation's flipping around. It's not regimented like it was in the early part of 2023 after the October 22 drawdown. So it's shifted just a little bit. So over this last week, I've been spending quite a little bit of time digging down into the charts and really trying to decide where we're going. So for the S&P 500, I'd like a better pullback because we're getting too extended here when we look at our monthly. But I see a target up here roughly around 900 as far as our extended target. Now, that will not come in till the later part of 28 or 30, so it's a couple years out. But once we get this next pullback, and I'm going to step down to a weekly chart from here just to give a visual. The larger picture, though, what I'm looking at is, hey, this is my peaking drive 1, this is peaking drive 2, and I'm looking for a third one up here. And then potentially it could extend. But as we step down in time just a little bit, I have a stop here at 647.87. Until that breaks, we're bullish, folks. It doesn't change. If we look at the RSI structure, notice the length of this mound here. And if we go back, look at the prior mound, how it was a little quicker. We had fade here. So, this was a huge consolidation zone back in 2018 that lasted to early 20. And this whole leg, this is sort of our larger mound 1, and this is mound 2. So this is our peaking drive 1, peaking drive 2, peaking drive 3 that we're putting in now on our second mound. And that is how I'm looking at this. I'd like a nice pullback so I can get long, because I do think we're going to stay long for a little while. I would rather a deeper pullback, but we just haven't gotten the decent divergence really to give us confirmation that we're going there. All right, jumping over to the NASDAQ, there's a little bit more of a mixed bag with the NASDAQ. An ideal target is this 648 because it's a 1618 off of that prior leg. So I would expect that we push up here to maybe the 651 and get a back test, maybe to the base of the broadening formation, which is viable. However, it would be much more euphoric if we extend. We get very euphoric, go right up here very quickly, which we could do. There's nothing really that prohibits that kind of move, but structurally, then once we get to that 618, I'm looking for this kind of back test down to the speed line. But when I step down to the weekly, roughly my stop here, until we close below that 561, we're bullish. That's where we are. All right, let me switch over and go through some of our names. And I'm going to start with Upworks because it just got out of there, broke out, got a little bit of a push this morning. November 5th is the earning. But I do think this has some nice upside. Once we get above this shelf, we're not quite above that yet. We're just teetering on the top. I would suspect we push up a little bit, get a little euphoria off of that, especially with this volume build. Now, Cracker Barrel, we did add to that this morning, got to right at a half a position size. And of course, that did work. We're down around 45 bucks after the earnings call. So the thesis worked. In case we all know Oracle worked, we're now flushing back off that top there. And boy, was that a mistake converting that to common shares. I don't know that I'm going to do that again. I want to go over bias just for a second because the question was there, and then we'll continue on with the names just brief. And the thesis that I have with bias is that we all get FOMO. We all get fear of loss. I have it every day. The biggest thing for me is that it's not an easy market. We have so much volatility in both directions. All you really need to be in the wrong name at the right place, and you hit a mean revision and it's brutal. So full transparency here. I trade differently because of my position at this point in the year. I've exceeded my 2025 goal by 2x. Now, experience tells me this is when people give back huge chunks. They get the God thesis where they're, hey, there's nobody that can trade better than I am. I'm the GOAT, I'm the king, etc. And it screws with you. It does. So I'm in a challenging spot to run a swing trade room here just because this year's been good. It's my second best year I've ever had. So And with that, my entries are caution. So I'm either closing strength or risking new capital funded by unrealized gains at this point because I have a specific allocation. I'm over that allocation at this point. And, I'm really trying to stick within my rules to mitigate that risk. So why bias spikes? Let's just bring that up. My guardrails, go, no go checks. When is time to hit the gas? When is it to stand down? Execution rules, journal, being candid with yourself, journaling about why you took an entry. Tonight, it's practical. That's my whole thing. And when we jump to really in context and reviewing the markets, how do we overcome the bias was the initial question that sort of stimulated. You don't want to overcome the bias. What you want to do is learn to trade around the edges where you have the sets, where you have your conviction. Like for example, where is my conviction with Cliff to the upside? Well, right here, where I was chatting, this 1234, which is fair value gap where we have a void. So this is an imbalance, the strongest thing that can sit on a chart, basically. It's a magnet, both the pull price down, right? Pull price down, and then it flushed over it. So quite often you get that final flush. Once you get that final flush, you go back and look at your RSI structure that's right there. You have your confirming grouping one. So this is mound one to the downside, basically. From this high down to this secondary low, that's mound one. So that's an impulse, happens to be an ending diagonal, which, tells you we're going to probably flip bullish once we get a continued trend. Now, not always are they equality. It's still an ABC to some degree. This is your A, this is B, and then we got a C, right? And quite often after a leading diagonal, your C is shot. So you got this clean ABC here, where you got the final flush, then you got the back test, and one more push to the downside, sort of to take out all the stops. It's basically a stop. So like I said, once we break back above this 1230, right now I'm in $12. I'm a little upside down on them. The next strike is $13. Once we push up here, at any point, and I would assume we get some rejection right here. Maybe we get some rejection and I get a back test, and I'm looking for at least 2 candles on there where we don't necessarily take out this particular low here. I'd love it to stay above 10.99 if it does pull back. Then I'm going to roll up to 13s. But my initial target on this trade is the 618 at 1635. And second target's 1923. Third target is 2297. So that's the game plan. So my stop at this point is a break below this 1006 rough. That is what we want to stick to. Really, could give it a little more room to the downside, but I see no reason why, considering we had a nice push on this candle, nice volume flow coming in. It was followed by this volume candle. So structurally, I'm looking at the whole context. So when I put on a trade, I understand my charts. Right. And I'm going to, really encourage each of you to get a roadmap for every stock that you enter and have a plan and keep a journal about. That is how I overcome my bias when I'm looking at setups and realize, it's not that we have a conflict in my position size. It's where I've exceeded my goals to the degree where I haven't taken a decent loss. I think the worst week I've had in 2025 is I had a drawdown like $22 and I turned around and I got up. So I've gotten hit 3 different times and I've landed on my feet with the exception of, I think it was a total of 4 weeks where I end up booking something in the red. But the week after that, the gains came back. And they tend to be very aggressive when I come back. So it's like you're rotating. It really depends on what position sizes you have on, where you have them, how you're mitigating that risk. And, you only can do that by micromanaging the trades that you're going to enter in. So until you learn how to do that, and I know a lot of you are new to swing trading or new to selling premium, you want to do it in small lots. Cleveland Cliffs is a good name to sell cash secured puts on because basically you can sell $9. You're not going to get a fortune for this, but it's a good way for you to get your feet wet, versus buying the calls where they would necessarily expire worthless if the trade's wrong, whereas the cash secured puts would be a better position, especially when you're in learning that kind of thing. So I wanted to, there really is no way to overcome bias. It's just you have to really understand market sentiment and conditions. And the general rule that I use to be bullish is I like the Magnificent Seven to be all green. However, on the last 5 occasions we woke up and had a green morning, I only added long positions on one of them. And a lot of that has to do with how elevated the indices are and the fact that we really haven't had a quality pullback that pushed beyond the 382 fib. I'd rather have a decent pullback to the 50% fib or the 618. Then I have some conviction the sellers are done. Or I get a decent wick like here. This was like really solid low on Cliffs off of this value gap that we have here, and that it bounced. I mean, right down to 50% of the move. I mean, it's near textbook, as far as that's concerned. All right, so let me go through some more names here. Hopefully that helped. Feel free to post any comments in chat. If there's more detail you'd like, ask the questions. That's why I'm here. I don't have a problem with it. If I don't have time to do it, I'll be the first guy that tells you no, I don't have time. All right, looking at Clean Spark, working. All right. So our stop should be based on the anchor at 108 and 843. I've got a target up here at $20. I like it. I like it for a recovery. I think it's a benefactor late stage for AI. Reason is because as we get bad actors in artificial intelligence, the only way that you're going to beef this up is you have to bring in pretty aggressive internet security. And, that's what Clean Spark. I mean, that really, their structure, their whole model. So I think it has some decent upside. Now, let me jump over to BMR. I'm going to have to come down to the daily on this one. Now, I was reading an article on this, today, or a post. I'm not selling until it hits $2,000. I think it was fund stress. And the reason is because of the thesis that the earning revenue that's going to come in on this off of stake and Ethereum. And they've made some large transactions. And right now it's working. I have $60 cash secured put sold, went a little deep because I wanted exposure. I thought we'd be a little further up in price right now, but right now I'm looking for $65. Then I'll decide whether I'm trimming or not, taking profits, because you can use cash secured puts the same way you use calls, but they present a different dynamic to your risk, which is why you see me taking those, because I'm in that cautious mode. I'm perfectly willing to own BMNR, right, based on its owning of Ethereum and based on my other positions in Ethereum. I think it realistically has a price up here to about 129. 618 based on this entire retrace. We're taking this trough peak and this trough, and that gives us 618 at 129. So the anchors I would be using on this, if you bought common or you did calls, would be 1238, 2657. I'm probably just going to let this thing run, and I will only trim if I need to raise cash, because I'm looking at, I don't believe I will, with the unrealized gains that I have in my book at this point, that I will need to raise cash and close positions because I revert and I'm looking at a 20% drawdown, because ultimately that's really how I manage my bias. So there's been times I get nervous because I'm growing on the potential losses. So when I calculate it on Wednesday, I'm looking at it as far as my total P&L. I look at it in, sort of a comprehensive picture. I have some currency holdings. That really is where my thesis is. So I like BMR because of the Ethereum thesis. I like the idea of the premium coming in. And, the great thing was I found it before fund stress. I always love saying. All right, let's look at ON. I still want a position on this. It hasn't given me a reason to jump and getting some nice divergence here. I like it. It's really right about here, about $40.80. Quite often on a corrective leg, you have two divergent prints in RSI. So I would assume we get something similar to this over here. So, it might not roll until, next month, but I still like it. Just with this pullback, I like the look of it. And I think it does recover. And that's my 2 cents. All right, let's look at URA. It did not perform anywhere near as well as UUU. And since I mentioned UUU, let's just go there. So, it hasn't really taken this out. You can actually move your stop up, if you haven't already, to roughly 42.50 for your second anchor. And then I'm going to jump over and just do UUU since I spoke about it. It looks much, much cleaner. This, uranium is a long-term thesis. Realize if data centers in AR are going to grow 100x. Look at what Oracle just reported, right? 18 billion in 2025 to, and I'm forgetting what year, 2029 or 2030, whatever it was, 144 billion, right? That gives you the thesis of how big this is, how gargantuan this is, right? So who's gonna and who and what is gonna run those data centers? Well, first of all, they need power. So where are we gonna go get cheap power? I mean, we're building, which I totally opposed, and actually I sent some letters out last week. We're building 2 coal-fired plants in South Houston because of demand. I'm like, oh, great. Like our air quality isn't bad enough. I'm like, I don't want those. We're probably going to be doing that all over the United States because we really don't have the capacity to double the data center. So, that is a challenge that we have. And so I think the small nuke reactors and uranium, I think, are going to become big because they're going to be like a Tesla factory. They can make them in small boxes and move them to where we need. But that's my take on that. So my monthly chart for UUU is $20.37. And it is now in play as far as I'm concerned. So $20 is in play. So the idea is to try and stay in this, right? So the challenging part is really to earn premium to the upside to insulate. I mean, we're due for a pullback, 3 generals. Quite often we get the 382 pullback minimum. So, I mean, just measuring from your trough to your peak. I mean, it probably is here though, because that's where our risk is. So, $15.99, $16. So we might pull back to $11 from there. So as we're moving up, maybe you want to sell some 17, I'm not sure if they're 17.50 or $20 calls there. I haven't looked at them. But you could sell some covered calls on your position as we start pushing this, to earn a little income and insulate in case we get a pullback before then, kind of thing. And then if you get taken out, you turn around, just sell some cash secured puts or buy some calls right at the money once we get that pullback and we get some kind of divergence. Right now, RSI is not confirmed, but it's kind of confirming on the second round. So we're going to get at least one more divergent high from where we are, which I think it's going to be up around $20. I think I think it extends to that. I think there's going to be more news on uranium. And I think it just pushes it. All right, let's look at GTC, Giga Cloud. My thought here is 36 is our first target. But I'm going to come back and we're looking at this whole mound structure. We could easily push up to that $77. Structurally, it's there. Everything's in place. I would like more volume on this. I don't ever like skinny candles like we're getting here. I like candles like this, okay? But we were skinny here at the beginning. So my thought is that we're going to expand like we did here. So that means we'll get real aggressive, as we get above $43. Should get real aggressive to the upside. So I still like that. Anchor is 414 and 2515. If I didn't have a position on here, I would be selling $20 cash secured puts here, kind of confirming on the RSI as well. So we probably get one more little pullback, but I think this holds. I think this shelf holds right here. This little thing, I think that holds. All right. And the reason is because this wick off, we're above it. Notice there's wick off that we had here. So we had buyer exhaustion here, buyer exhaustion here, buyer exhaustion here. We flushed out of it. So we had that final clearing out of the sellers and boom, and we've just been grinding back up and this is really our next higher low. So even if it's a flat, second mound up should be at least $52 is my thought. So, but the trade itself that I posted here was really just targeting that $36. So this comes back to my bias. So there's at least one map, the current setup that I'm trading, and then the longer position trade outlook as far as what I think might occur in a longer term. I like GTC for a push above these highs at some. The question is, am I going to get back in here at 19 or am I going to get my $45 now? That's the kind of thing. All right, let's look at Wolf. It's worked. 57 cents is your anchor and 991. So that's where my bullish thesis really kicks in. 1168, close above that. Then I think we run. I think 168 is viable. So I'm looking at this as peaking drive 1. So we get a peaking drive 2, peaking drive 3. Then we should get a decent back test, which should test this shelf, and then we get another breakout as well. But again, this is another name, we'll go on to the monthly, that I like for the longer term look because of the history of the tape here. Notice how the demeanor has changed in this stock. Notice how the volume is really aggressive here compared to. So we've had a regime change for whatever reason. I don't know exactly why the funds have picked this up, but you look at these volume candles. This is huge, okay? So we should start squeezing in volume. So these candles, even though this candle is not aggressively, if we get another candle similar to this up here, This is going to be very euphoric to the up. I mean, like just a launching pad. And the reason being is because we have this imbalance that's occurring right here, roughly at this $7 level. So if we push, come back and test this level, it gets back right here to the middle. That is going to be a launch pad. Those are the kind of trades I really like. All right, BTU. Let's go back to the weekly on this one. Just making sure I'm recording. All right, so this, it's perfect setup. Again, it's working. I got no complaints. 80 cents and 1567. This first target, which is just trading this flush, right? We've already pushed above the 50% back at 1978. So I think we get a little breakout. However, we're accelerating a little bit. We are getting a little bit of the squeeze. This push off of this candle and the way these candles are coming in. Note how we get this kind of squeeze. Even in this retrace, it came right back and regrouped and then it launched. The MO of a stock is something that's very important. Now, what I do notice is that our candles are different. They're slender. We don't have as many buyers as we had here. Now, I don't know if that's necessarily a bad thing. So once we hit this high, and whoever sold up there at 33 bucks, we had a regime change. The only change is this candle. So I would like to see more volume here where I get some conviction, but we are kind of confirming on this high. So I would think we get at least one more divergent high and likely a third, which is close to that 618. Then we get a decent retest back to about 22 bucks and we get a shot at re-entry. That's my take. Galaxy worked perfectly. Shook us out though. However, I still think our target's up here around 39. The anchors I would be using now are 1740 and 2295. All right, sound has done nothing wrong. We're just sitting there. We got our $15 covered calls sold. We're back in the money, so we're good. Just sitting there. Now, team, I still like this. It's not done anything. It's sort of just sitting there. Hasn't hit my entry, so I've got a trigger off of this 182.73 as far as an alert to enter and 324.45. So let's look at IBIT. Come down to the daily on this one because it's just too messy. So my risk anchor is at 22 and 38.17. It's done nothing wrong here. We're just building this out until this ledge break. It's 56.72. It's still done nothing. And in that case, it's probably going to come back to 50. So if that does break, you probably get a cheaper price at 50 bucks. Kirk, I think he mentioned he wanted to buy it at 50 bucks. I tend to agree with that. Maybe a little bit lower. We have this imbalance that occurred roughly here from this 48 down to so that's back down here. That is the optimal place for an entry. So that's between 48 and 44. All right, speaking of UNH, let's jump right into that. Trade setup was good. Wish I had a position on it because it was good. I mean, it was solid. I know at least one of you, maybe two of you, took cash secured puts. So I think it was right here around 320. We're kind of confirming here. So, I look at this as peaking drive 1, peaking drive 2. So we likely get a third around 400. So as we push price here, we get further into that gap. It fills this gap down here. I would close that position. This gap gets filled, And the reason is because you have this island down here, this imbalance right down here. It shoots across that ledge right down there. So in that case, that gap gets filled. The most likely target is back to 50% of that range at 286. So we'll get another flush south if that occurs. But right now it's done nothing wrong. All right. NFE, go out to the weekly on this one. Nice push off the floor here. Target 669. I see no reason. Maybe we get this, pushed much lower than I thought it did here. So, we could get a little bit of it distorted. So maybe it does something like this before it breaks out. So it's a pretty common pattern in this final leg. Is it a flat? Which it probably is. So we're probably going to build out a flat. So I would say that ABCDE is a viable outcome. So maybe you want to take some profits or sell some covered calls when we get up around 4 bucks. That's how hopefully I answered your question about NFE. All right, let's look at IONQ. I like this 85.10 as far as the target. Again, what I'm doing is I'm measuring this leg. I'm not measuring this leg because it gives us too steep of a climb after this, almost a diamond shape, but we got a clear breakout. So I would expect we get another general like this. Then maybe we get a pullback. So how far you want to hold into that push? I think it has a lot of, this one is another one where I come out to the monthly and just visually looking where we are. This is our consolidation. This is peaking drive 1. So we're going to get peaking drive 2, get it back, peaking drive 3. So potentially we could go to 100 bucks on it. All right, let's look at Planet Labs. Should have put something on. Should have. It was on my radar. I got sidetracked, didn't do it. Okay, 347 and 771. Shoulda, coulda, woulda. I can't tell you how many thousands of stock, thousands that I have picked that I ended up not owning for whatever reason. And It's just the nature of the beast. You can't be in it. So nice solid general. We're sort of hitting a little resistance. I think at 10.94 we might hit a little resistance, give us a back test. We get back to $9. I like that as far as a shot, to enter if you don't have a piece on maybe. That would be my take on that. Okay. Irene has done nothing wrong. I think we target this 41.34. However, it could very well, this is extremely euphoric. Look, peaking drive 1, kind of peaking drive 2. All right, it's not really clean on the weekly. Clear breakout. Question is this peaking drive 2 or is peaking drive 2 going to be way the heck up? And then this thing extends well past the 2618 and heads up towards $74. Good. I mean, I'm just giving you an idea, just giving you a quick visual, not spending too much time. So let's assume this is our 1. This is our 2. We get a 3. I could push all the way to the 200 fib here. It's not done nothing wrong. And equality, we could push well above the 2618, but that's a good target after the 161. So I would say 57 is viable. I would say conviction of 41 is 100%. Conviction of 57 is 80%, or maybe even a little lower. All right, let's look at Rocket Lab. Done nothing wrong. Anchor should be at 348 and 42.94. We get a pull back to that 618 right here. It's a good spot to enter. Reason is because you have this imbalance that occurred right here. Boom, right between this puppy here. So right here at roughly $33 is a good spot to enter if you haven't. And I would expect something similar to this. We got a very similar digestion. Look here, right? This is just more euphoric because we have more buyers there. Our highest volume was here. Our second highest volume was here. Right? And then we followed through with a much broader candle here, which is kind of unusual. It's usually euphoric. So I would suspect, because that's our biggest candle, either this was the start of the breakout and this was all noise, right? Or we should back test to the peak of this candle here, roughly, where there's another gap right here. It's very skinny between 38 and 38.27. I mean, it's pretty shallow right there. So if we pull back, it'll be right there. That'll be a nice launching pad if you don't have a position on. But I really like to stick to the fibs in this market because fibs they're working really good. So the strategy that I've laid out using Fibonacci extensions has worked. I mean, there's no question on that. So I want to make sure I stick to that in my theme as far as how I'm pitching the book, so to speak. AST Space Mobile. I actually like it here. The only thing I don't like is this. RSI didn't come down, didn't take out these lows. I'd rather RSI got a little bit more of a sold. However, in an uptrend, sometimes you get the squeeze in RSI, and that's kind of what it looks like. This is a little too euphoric for the squeeze. So to me, the squeeze was here. So we saw this clean breakout here. We also have this demand zone or this imbalance that occurred here. So we got a huge imbalance here. 50% of that is roughly $35. So I mean, we're almost there. 36.08, just a smidgen. So I'd use the anchor of 2035, 36.08. Any kind of back test to the top of this ledge, you really want to watch if it's green volume. Notice how thin the MACD cross is. And the thing I like the most about the MACD cross is it sort of confirms really clearly when you're in an uptrend. You get these big extensions. So we really need it to cross bullish again before we take an entry long. And we're wanting. Note, we've just started to turn green, so we should get a number of green bars like this, and then it rolls over. So we should get a little bit more of a push, and then it's going to roll back over. So there's a possibility that this is an impulse leg down. So that, is structurally something we want to keep in mind with how we want to enter or not. So sort of looking at it like this is probably something like an ending diagonal if that's going to be the case. So it could push all the way to $46 and reach out. All right, let's look at Lend. This is a slow mover, but it's not that wrong. I like it, $61. I think it's going to continue to grind. 11.13 is your anchor and 31.18. All right, GE. Man, this just hasn't slowed down. Go out the monthly chart here. This has got a lot of upside. I don't know how AI is affected. It's got to be doing something. Because this really, DuPont and GE were the two stocks that I cut my teeth in with technical analysis. All my original work, I started with these two stocks. And I didn't catch this one. I didn't have an alert on it. So, yeah. Good. That's the way it is. All right. So the anchor right now I would be using, you can push this up probably to 263, right? See a kind of a megaphone pattern here. But I think it's just noise. I think it's going to continue to push. If we do get a back test, maybe with this kind of euphoria, it gets back to the 50% fib is where I'd look to enter. Otherwise, just continue to try and ride it. When we get some kind of divergence, the MAC will cross. You do have kind of a confirming high here, right? You now are putting in a divergent high. So this is peaking drive 1. This is peaking drive 2, wherever it ends. It's turning up, so it's not done yet. So I don't think it gets back above this 88.54, but I would venture to say that we maybe can push to 85.40 and we pull back and we get another put. That'll be our peaking drive 3. All right, BBAI. Nice comeback here. Let me go down to the weekly. Let's give us a visual. Anchors 242 and 465. Now, my caution here is this, because this just does this inbound rate. We're not above, we haven't tested, but we probably do. So I would suspect that we reject right here at 643, give us a little back test. That might be a better spot to enter. However, I don't disagree with selling some $5 cash secured puts here because I think it's a good spot to enter. I think it does have some significant upside. I don't know how big they're actually going to be at AM. I haven't dug down to the micro and macro. Maybe if somebody has, you'll post it in chat so the rest of the group can benefit from that. All right, let's look at TTD. I like it, 38.79, right? A lot of reasons is this imbalance that's occurred right below there, right? And also just measuring where RSI should come in. So I'm thinking we get, sort of confirming here, right? You get the same flushing drives like you get peaking drives in price, but it also shows up in RSI. And so this is flushing drive 1, this is flushing down 2. So likely we get a 3. So in the larger picture, realize they stair step in time frames, whether it be monthly, weekly, daily, 4 hour, 30 minutes, etc. So this is flushing drive 1. So I would think that we get a flushing drive 2. And if I take a speed line from a prior low and I come down here, so we could get all the way down to 26 bucks. Okay. So, it may or may not be done. I can't tell you. It's a good spot though. We get down to this shelf. It will bounce. It'll bounce enough probably to go back to the middle of this band at 49 bucks. So if it gets down to 38 bucks, we're looking at least 10 bucks to the upside. I like that risk reward. All right, let's look at Permian resource. Maybe done. I've got an alert set right here. Get back above. Roughly, what was it at? 1446 and 1502. I basically got the trend line alert set. So when we enter, your anchor support would be 1001 and 1274. And it roughly targets this 61.8 at 15 bucks for me, the initial ledge. Reason is we have this unbalanced volume right here, the shelf up here, which probably gets us to reject decently. So, however, that time frame is probably November. Maybe the end of November. So this might take a little time to the upside. All right. All right. Looking at lunar, I must have set these up daily. All right. So anchor is 614 and 821. I think it's worth a shot here where we are. I mean, we went right down to that ledge. We really don't. I mean, we have a little resistance overhead. And we have basically didn't get down to this shelf. We have another shelf that's right up here, which is right about where we are. Right here, pretty skinny. So, I mean, we're right there. We haven't taken that out yet. So I get conviction above 1004, and then we should run to 12. Those $12 calls actually were decently priced. Not as much volume as I would like shorter term. So you might want to push November if you're going to try those $12 calls. Otherwise, I'm not opposed to selling $8 cash secured puts here. I think it's deep enough. And not only that, the way that I think about this is, okay, this is flushing drive 1. This is flushing drive 2. Maybe we get a 3 down here at 775. Right? All right, let's look at NVO. Now, I still like it down at 36, but I might be wrong. It might be done now. It's into the gap, right? The challenging part here is RSI is not bullish yet. Okay, so there's no conviction to the upside here yet because notice how we rolled, gave it back. Notice how we're shallow here. So we are squeezing a little to the upside. So let's call this peaking drive 1, peaking drive 2. So peaking drive 3 will probably come in. So I think maybe we have a shot at roughly 65 bucks. So there's potential to the upside. So it's a matter if you're in it or you've sold some cash secured puts, manage your risk, come in, do a confirming trend support, use this low, and I would go up to my next way, just go to the body. And that number would come in. Let me just throw those labels up there for you. I mean, it could be done here. You're just challenged when certain conditions are there. 45.05 and 54.87 breaks below that 54.87. you're probably going to get a little better price. And I would see what it does back around $47, $48. Okay, AEHR. Boy, this thing just came right back. So Anchor is 627 and 24.64. I like it up to 33 bucks. Let me just measure the whole cycle here. So 618 on the cycle is back up around 39.60. It's viable here. It really is. Structure's long. I mean, solid. I mean, just solid look. I think we're definitely heading towards the 33.44. And whether or not we get a back test there, I'd love a back test so I could get long, because structurally, this is a very bullish looking, very aggressive tape. Notice how clean the crosses were on the MACD as far as where that number is. And then how clean we had our confirmed high, right? So we got peaking drive 1, peaking drive 2, peaking drive 3, high and tight. Then it gave it all back near and then some, which usually is a good sign. So again, a tape develops the MO and just kind of pumps. So that's my thought there. All right. TI, I don't even know what the heck this one is. Come down to the daily where I drew it. Yep. All right. So risk anchors are 60, 85, and 142. Like it 237.96. CRML critical metals. Definitely not playing out the way that uranium is. I don't even know exactly what they own, but 123 and 552. Again, I see this ABC here. So, maybe sell some covered calls on this, because equality takes us back to about here. So of course, if you don't have a position, and I'm not going to necessarily encourage adding here. Reason is because you look at this imbalance down here, you have a number of imbalances, pretty tight right here, right? And then you got another one over here, down to here. So this is a bigger one. That's more of a put. If we get down here, that's a really good spot to enter at 340. And then we even have an imbalance here that's a little below there. And then we got another one that's right down here. So structurally, I'm looking at this. This is our flat. Right, so this is peaking drive 1, this is peaking drive 2, this is peaking drive 3. So we probably do get the full ABC corrective leg here back to 470. That's my 2 cents. I'm sticking to it. ASPI, anchor is 659 and 782. It's done nothing wrong. Target should be about 1083. Circle. Now, 64. Now, this is an overshoot here, by the way, because you have this, bring in this imbalance here. So we took this out. We overshot it. It's not sticking. I don't have time to get it to stick, but roughly. My hand's tired. Looked at too many charts today. All right, so, it went right and then it overshot it, so this back test, it probably does get up and out with a pretty solid push back to the upside. However, it's not on I like the chart. I do. It just doesn't have enough time and duration for me. And on top of this, I really have no conviction in either direction here off of RSI, because I have no divergence indicators anywhere on this tape. And that's because it's so new. So that takes away points for me to get long. I want RSI divergent, okay? I want some kind of demand zone. I want some kind of an imbalance zone. I want it to tag certain fibs. If I come back and I look at this from a corrective basis, just taking this entire leg here and looking at it, where we do have some conviction is we came in, we took out the 618. We pushed to the 7.1 and then down to 78.6. So from that standpoint, that's bullish. However, not having the other conditions, I would rate this at maybe a 65 or 70% trade, just because it doesn't have all of the conditions. All right, looking at AIRO, I like it at 1756. Reason is because this doesn't look done. It's just, we come in and just draw the corrective leg down. Doesn't look done to me. I might be wrong, So, and the reason is because this 5 just looks equal back here. This is too shallow. Notice the distance between, I think I said this last time, June of 25, and then we have our low in 8 of 25, and equality is 9 of 22. Usually with an impulse leg, they're pretty close. You don't get this shallow push. So I think one more push down there would give me some conviction on taking. All right, let's look at Microsoft. I like it a little lower. I like it to this imbalance zone at 486, 355.67, and 484.16. Microsoft, I would be selling covered calls up here. Maybe sell 520, 525 just for some revenue. Do the monthlies just so you stay short term, because we're probably not going to stay in this downtrend very long. So if we do come take this out, it'll be the end of this month, first of next month. So maybe do a monthly. That would be what I would do. All right, Lulu. And I got to come out to probably the monthly on this one. Doesn't look done to me. Where do I like it? I like it down here at this this demand shelf at 107. It's got a waste. And part of that is because of what I see this as. I see this as an impulse down. Not only that, that mouth on the MACD is wide open. Let's say this is our 3. So this is our 4. So I'm going to get a 5. Where does it go? Just measures equality. That's, if that was just that kind of look. MACD, notice how open the mouth is here. It's not done. It's also confirming on RSI. So means it's not done. Where is the void, or where should we go? Right back to that shelf, because that's where it was. We've already broken this high. Note the body of the candle came below there. So it went below that 164.99. So this is broken. So that shelf technically is broken. All right, EMPA. Actually, I like it here. 451 is your anchor at 29.89, as long as it doesn't take that out. We're starting to turn. MACD is well overdone. RSI kind of confirmed right back here. So we got one more lower low in price. Nice volume push here. Okay. Really don't get solidly bullish until it's back above 66. But from here, it measures to 72.06. So looks good. SEDG really looks good. Boy, solar just came back. I completely missed solar. This has a potential shot back at 244. Now, we've already taken out our 618. So we've kind of confirmed and got a divergent high here. So I would suspect that we could pull back just a tad bit. So let me expand this out and give you guys a visual. We break above this prior high. It's going to keep going. We have let me just do 2 things here. Where was it? I don't remember where my gap was. There it was. So we have this. Actually, it's a little lower. Excuse me. There's a better one just below there. So this is a shelf where we probably get some rejection. So I'm liking it. I'm going to come in and just measure this whole leg, give you a visual pullback. So we've already come back and tested the 236. So that's shallow. So that's what I'm saying. If it breaks out, it's going to keep going. Probably still see some rejection at 41. So we see any kind of red candle come in behind that. I'm just looking at this. I'm looking at that. I'm just counting my count. And we sort of they're tight. Nice uptrend. So anchors is how I would manage this. Do your confirming trend support. It takes this out. Then I would probably reevaluate. So my anchors I would use here, 1024 and 2854. Thanks for joining me. Great trading. Until next time.